Welcome to Think Smart with TMFG, the weekly podcast covering the financial topics that are newsworthy and relevant to everyday Canadians. Hosted by Senior Financial Advisor Mike Connon of the McClellan Financial Group of CI Asante Wealth Management Limited, here is today's episode.
Welcome to Think Smart with TMFG. I'm Mike Connon, Senior Financial Advisor with CI Asante Wealth Management Limited. We're continuing our series on business owners today with our first ever outside TMFG expert invited to the podcast. So joining me today is Peter McCarroll. Peter is a practicing CPA and the founder of Fuel Accountants, where he and his team work with family-owned businesses on bookkeeping, accounting, tax, and financial advisory. They are Profit First certified. He also runs the AI Accountant, where he works with other accountants and bookkeepers on the transformation AI is forcing on their practices. Peter, thank you very much for being here.
Thanks. It's such a pleasure. I'm glad I'm the first. It's my first podcast-only episode. So first all around. That's wonderful.
So before we get into it, you're Profit First certified and you're deep into AI transformations and you're still doing on-hands accounting work for family businesses.
Yeah.
Of those three, which has taken up more of your time?
Well, I think the day-to-day bookkeeping, compliance, annual returns, tax returns, kind of stuff, that's the bread and butter of what we do.
Yeah.
So that's a good portion of what my team spend their time on. In fact, that's most of what my team spends their time on. I try and focus my time on actually talking to my clients. So guiding them through Profit First, coaching them through business, helping them run a better business.
We were talking earlier on before, we had a bit of a pre-interview and we discussed, you're seeing business valuations moving opposite directions right now. Some are rising and some are dropping. What's happening from your point of view?
Yeah, so we're seeing, obviously, there's a lot of activity in the business sale market right now. We expect that there'll be hundreds of thousands of small businesses change hands in the next 5 or so years. One of the challenges is buyers are getting more and more picky.
Yeah.
They're wanting the sellers to leave behind more and more, whether it be seller take-back loans or seller participation in the business. Multiples, I think, are dropping.
Yeah.
I'm not a big business sale guy or business valuation guy, but that's my gut feeling. And I think, particularly in the accounting space, because I speak to a lot of accountants, we talk about the K-shaped economy, right? Well, there's a K-shaped business sales economy happening as well.
Yeah, I can see that.
We're seeing some businesses go up in value quite well.
Yeah.
And we're seeing lots of businesses go down in value. And for accounting in particular, but I'm sure this applies to other businesses, I think a lot of this has got to do with where do they stand on the adoption of technology and particularly AI.
What I've seen is a lot of people are out buying cash flow rather than businesses now.
Mm-hmm.
A lot of people are out searching more for a cash flow model. People used to buy a business on the hopes of taking out the business and run it and doing all this and be involved in it. There's a lot of money out there that just wants to buy the cash flow of what you have coming in.
Absolutely.
Yeah. It's really created a different model. And again, sometimes that can increase the valuations, right? Because if you have a cash cow, it can be worth quite a bit to someone. I talk to a lot of business owners and sometimes I say your business is worth more the less you're involved in your business.
Mm-hmm.
And it's a hard thing to get around because when you start a business, it's about you, right?
Yeah.
This is your business, is everything. But later on that's early stages. But when you want to get to that sales stage, if you're a real key, important part of your business, the valuations aren't going to be as good.
Yeah, that's right. Well, and the irony is that if you build a business to the point where you are no longer needed in your business, you could sell it for much more than you could if you were essential to the business.
Yeah.
And the irony is that once someone builds their business to that point, they suddenly realize, why would I sell this business?
Yeah.
It's doing for me what I thought this pot of gold would do for me, which is I can invest that and give me stable cash flow. And all of a sudden, they've got a business now that gives them stable cash flow, and they don't have to show up to work every day.
When should people start thinking about, how to structure the business for a sale?
When they started.
Yeah.
And if you've already started your business, at least 5 years before you think you want to sell.
Yeah, because it's not something you can do overnight. You can't say, okay, tomorrow I want to exit my business. I guess otherwise you're not getting the value out of your business, right?
Well, what you have effectively is a fire sale. If you try and sell a business in 1 year, the chances that you'll get the best valuation for that business is very slim.
And you're going to be doing purifications and things like that.
If you're aiming for the lifetime capital gains exemption, that takes a good 2 years. You can usually get the first year without much trouble, but to get that last, that on sale date, there's a lot of effort required to get a business to that point. And a lot of business owners just aren't ready for that.
So probably when people start to be an age generate, but when people are in their 50s and they have a business, it's probably time for them to put that in the back of their mind and say, okay,
Absolutely.
what's some type of exit strategy and how do we start to move toward that? Because again, some things naturally are going to have to take a couple of years, but there's another part about structure a business that can run without you that may take several years to get in place.
Well, yeah, and it does. The other thing too is, you have to think about who your potential buyer might be. The business that you run, because these are the people you like to work with, might not be the same clients, the same people that an institutional buyer might be interested in. And if you're thinking that, hey, my business is going to add real value to a larger organization because we deal with a particular niche and they can literally just buy their way into that niche. But if you're dealing with the kinds of people that those institutional buyers would never want to work with, they're never going to buy your business. So again, this is why you have to think about it from day one. Am I bringing on the right kinds of clients? Am I selling the right kinds of products that a potential buyer would be interested in? Just because you're interested in it, and there's nothing wrong with that. It doesn't necessarily mean that that's going to add value at the point of sale.
There's a marketability to it.
That's right.
It's funny when you talk about house sales, they always say, if you invest in a pool, it makes your house worth less money. And the idea is that there's less people that want a pool.
Not everyone's going to take the risk of buying a pool.
So you go and of course it costs money. It was more value put into it, but is it worth more when you're going to sell it? Again, you can get into things in your business that you might have a passion for, but no one wants to touch. Either from the legality side of things that might add extra risk to your business or some type of effort that you may like doing, but someone else may have no want to go and take on that as a risk management or as a work point of view.
Yeah, exactly.
You do a lot with AI.
Yes.
Right. And that's relatively new coming onto the scene. AI has been sort of in the background, but it's really become front and center in the last couple of years. So talk a bit about that.
Yeah, well, AI has been actually around for a long time. People underestimate how long, the geeks have been working on this stuff. I mean, it's been over 20 years.
Well, I even go back to when Big Blue beat.
Yeah, exactly. That was a form of AI.
Absolutely. And that was done in 1980 or something like that.
That's right.
So it's been around. It's not a brand new thing, but it's now available to the public.
Yes. And that was the big change in 2023.
Yeah.
When ChatGPT came out and, said, hey, you can download an app and, talk to a thinking machine.
You don't have to type.
Yeah, you could just literally talk to it.
Yeah.
And that was the real game changer.
Yeah.
And of course, we look at what was available in 2023 today compared to what we have available today, and we go, oh, how rudimentary was that?
Yeah.
But that's how every technology has come.
Yeah.
It comes out with the basic stuff first, and then it just gets better and better and better and better.
We always talk about there's two things you can do. You can fight AI or you can embrace it.
Yeah.
And the fighters are going to lose and fight.
That's right.
You're fighting Mike Tyson.
Yeah.
And
exactly.
you're not going to beat it. There's that reaction from a lot of people I don't think it's going to necessarily take over every industry, but it's going to put pressure on because, for example, in my business, the average advisor that never did much, they can be replaced by AI pretty quickly. I like to say, everyone wants to think their own industry is safe, but I know mine isn't.
No, I wouldn't put yours in the safe category
at all. So,
nor mine.
Yeah.
So,
lawyers, same type of thing.
Absolutely.
Whenever you go into these industries, it has an incredible wealth of knowledge.
Yeah.
So, but if you can use that wealth of knowledge, it's amazing what you can actually accomplish.
Yeah. And AI is, like I said, I'll use the word threat, not because I'm a doomsdayer, but we have to be aware of where the industry is going. And AI is a threat to any knowledge-based business.
Yeah.
And this is huge for accountants because we pride ourselves on our professional judgment.
Yeah.
And I call it the ostrich syndrome. The thing that's been troped out all over the place is that, AI will never replace professional judgment.
Yeah.
Well, here's the problem. And it's the same in your industry.
Yeah.
About 85% of what I do that I call professional judgment is simply the rote repetition of rules that I've internalized.
Yeah.
Same with you. You can look at a set of financial statements, you can look at an investment matrix and go, there's the problem.
Yeah.
Now, how you got to get there? Because you have years of applying a filter and you can just say, yep, here are the rules. That's why that's a problem. And you don't even know how you do it anymore. You just do it.
The paycheck available for just being smart is no longer available.
No.
It used to be if you're smart, I'm probably using the wrong term. If you know numbers and you're good in that and people would look at you and go, oh, that's a smart person. And that was easy. You didn't have to do much else than that. Now it's become a whole different situation because none of us are smarter than AI.
No, that's right.
At the end of the day, it's got a higher IQ than everyone.
And what I always say is that knowledge is now free.
Yeah.
Okay. What is not free is knowing where to spot the problems.
Yeah.
Okay. AI will be very confident, but it can also be very wrong.
It will be confidently wrong.
Confidently wrong. That's
Yes.
right. In fact, it'll try and convince you why it's
Yeah.
right sometimes.
Yeah.
And then when it is wrong, it apologizes and hope you didn't die because you took its advice.
Yeah.
But this is the difference between professional judgment that sticks
Yeah.
in the AI world and professional judgment that doesn't stick or that can't be defended.
Yeah.
Okay. It's knowing that unique piece of information or that unique piece of context that says, maybe for an investment world, this investment just doesn't meet your risk profile.
It's the one advantage we still have is understanding people, because luckily all people are different, and AI has a trouble interpreting that in the right way, and little nuances in their personality you pick up on, and you can tell. And I'm sure from an accountant point of view, there's a lot of gray area in accountant. Some people want to be this side of the gray area, some people want to be on this side of the gray, and it's hard to pick off where they want to be. But when you talk to a client, you understand really what's important to them.
Yeah. Exactly.
And that's some stuff where we still have a bit of advantage on AI, and even ourselves, we're doing a lot more corporate stuff now because it's complexities that AI has trouble getting into. It has a lot more thinking involved and a lot more options on what you can do. And I think you can really provide value in there. As accountants do great value in corporations, I find.
Well,
it's good.
One of the great things that a knowledgeable domain subject matter expert like an accountant or an investment advisor and a great thinking AI tool like the current round ChatGPT 5.6, Claude Opus 5.8, even Fable 5. These are fantastic models with wonderful thinking parameters. But the power when you put a knowledgeable user with a great thinking AI tool is the knowledgeable user will learn how to provide the right information to the tool.
Yeah.
So that the results come back are less likely to be hallucinated. And when they are, because they still will be, they can spot them and correct them very quickly. So AI is an accelerator. If you have good data, if you have a good thought process of your own, if you know what good looks like and you know how to spot what's bad, AI is going to accelerate what you can do.
It can be very exciting. One thing that I've found is I go to conference every now and again with other advisors, and some advisors who are much younger than myself who really are embracing this. And I watch some of the stuff they do, and it's incredible. One guy talked to me, they create a library. You can create libraries of information of everything they believe, right?
Yes.
And when they'd have a prospect come in, they would actually go and put in the details on the prospect, and they could create marketing material that's individualized, tailored to that prospect.
Yeah.
Something that would be impossible in the old days, right? You try to do it with a bit of personality and feel it out, but it'd be hard to put a package together that can appeal to all that stuff. Even in here, we've created we're very systems oriented. Our business has always been set up like that. So we've created and documented everything we do in here over the years. So we had them put that into a file, and we use Claude and say every type of process we have put in this file.
Yeah.
And now when someone goes into it, they can just ask it, I'm about to go do this and this for an estate. What procedure should I go through?
Yeah.
And I can walk them through all of our procedures and give a search engine internally based on the cyclopedia built. It's massive what you can actually do inside a business with this to become more effective. It hasn't really helped me in having less employees. I still have the same amount of employees. It's just they've become much more productive.
Yeah.
And we're moving at almost exponential pace of where we did before.
Yeah.
So it is very helpful.
Mm-hmm.
Where do you see 5 years down the road, where do you see your profession going?
I actually think it's not 5 years. I think it's 2 years.
Yeah.
The day-to-day bookkeeping work will be 99% automated.
Yeah.
We're moving to a world where bookkeeping will be as near real time as the banking system will let it.
Yeah. It should be too almost, right?
Yeah.
Yeah.
So I think from an accounting perspective, we're going to be moving to a world where bookkeeping is near real time.
Yeah.
A one-day close kind of things.
Yeah.
Adjustments are being made continuously. Corrections are being spotted, identified, corrected continuously. Yep. Transactions are being coded and matched on a daily basis. And that's all going to happen. Most of that's going to happen without a human who actually has to push the button or click the button.
Yeah.
Doesn't mean there's not going to be errors.
Yeah.
It just means that the errors will get caught in the follow-up process. Today, what happens is we catch the errors before we do the posting.
Yeah.
We're going to move to a world where it's the reverse.
Yeah. With taxes, you always look at it this way. If you consider the government adversary from yourself, they're certainly using AI.
Yes.
Right. So it's when they're going through your tax returns, there is no person looking at your tax returns anymore.
Mm.
They have pretty heavy duty software that is going to find any type of
flagging anomalies,
flagging all anomalies, and they're going through them.
place.
So if you don't fight their AI with your AI, you're going to be in a bit of a losing battle, right?
Yes.
They're definitely checking every type of thing and see if they can find anywhere where they can get you in there. So, I mean, you have to have the equal fortitude to trade on your end.
Yeah.
So for a business owner, what's your advice to them from a tax point of view, and in general too, but what do you think, what do you find people miss, or what do people do right?
Well, the average business owner, I'm less worried about tax than I am about cash flow. If you're separating your personal and your business transactions, which you should be, the chances that we miss a tax deduction are pretty small. Okay, you might spend something on a personal credit card by mistake. I always tell my clients, go and get a second credit card. I don't care if it's in your personal name, but only use it for business.
Yes.
Back in the day before TAP, I would say, put a different PIN number on it so that you had to mentally verify, have I got the right card? These days with TAP, that's gone away.
Yep.
But have a separate bank account, separate credit card. And that way, when your accountant or your bookkeeper is looking through your transactions, they know they've got the right population of transactions.
Yep.
We don't miss anything that way. The first thing always, especially for a solopreneur or a sole proprietor, is we miss transactions because they're not where they belong. They're not in the right bank account. So first thing is always just get everything in the right bank account so that we don't miss anything. The second thing is about the leakage of profit that happens when business owners don't plan their cash flow and don't keep an eye on what's happening in their business. And this is partly the fault of the accountants. I wouldn't say it's our fault, but because we're always, historically, we've always been behind. We're always reporting on the past. It's too late. You can't correct something that's already happened. This is a business owner's job, is to understand what's happening with their cash. And the vast majority of business owners don't plan for their cash. They're running paycheck to paycheck. If they want to buy something, they look in the bank account and see how much money is in the bank account. When the tax bill goes, the most common reaction is, oh my goodness, I hope enough money comes in before that deadline so I can pay that bill. And that's the totally wrong way to be running a business. The money should have already been put aside so that when your bookkeeper says, hey, you've got a tax bill of $15,000 due on the 31st, you go, no problem. That money was set aside when it came in. I know I can pay that bill.
Your business can't be an ATM machine for you.
No. Right. And that's the other problem is people, as business owners, take the money out of the business. And I've got no problem with that in and of itself because it's your business. Everything in there ultimately belongs to you. So there's nothing wrong with that if it's planned. But if all you're doing is bleeding out the business, taking every cent that's available, not leaving enough money in the business to pay your HST payment, pay your payroll taxes, all these kinds of things, well, you're ultimately robbing from your customers. And you're robbing from the government and your employees.
When we were talking about it, obviously the purification is a count and transaction you have to do, but there is also a purification of the business on getting real on what's in your business too. And we should come up with the term for it, a clarification, maybe whatever it is. But there's one that's, again, the entities for your small business deductions. But again, just separating your personal life from your business. Because too many people, are throwing their personal expenses. And I know they're doing it from a tax point of view, but it becomes a very difficult when you go to sell your business and everything in your personal life is mixed into there. It becomes a very difficult thing for someone to buy.
Well, two problems with that. Number one is, when you go to sell the business, how do you justify to a new owner that the real expenses of the business are $30,000 or $40,000 lower than your books say they are? If I'm buying a business, I'm not believing a word of that. I'm going to value you based on those numbers, not take your word that when I leave, all these fake expenses go away. The second thing that does to me as a buyer is I don't trust you anymore. Because I don't think you have integrity. The other problem, everyone says, I write all the stuff off on my taxes. The CRA never approves that. And when they find you, and they eventually will, not only do you have to pay that tax back, but your penalties are double or triple what they would have otherwise been. And if they find a problem in one return,
they're going to.
It's like yeehaw. I've got a minefield here. I'm just going to harvest this thing until it's dry.
The biggest problem I find with tax is people think because they got away with something that year, it then becomes legal. And I always describe it, if I could go and drive my car 100 kilometers an hour up Yonge Street and not get caught. Doesn't mean I'm allowed to do it all the time, right? So, and people have that in taxes. Well, I have a friend who did and they got away with it. I'm like, that doesn't mean they haven't changed the law over your friend.
The worst is someone says, well, that's how I filed my return, and CRA accepted it, so it must be okay. CRA didn't even look at your return. It's a self-assessment based system. They accept 97% 7-ish% of every returns that are filed as is.
And then they go and dig.
And then they go and dig after the fact. And just because they accepted the return and issued your refund or accepted your payment doesn't mean that they have agreed with your position. And they have 3 years, often more, to come back and challenge you on something. And so just because they accepted it doesn't mean that you're safe.
You have to make sure you're comfortable with what you're doing at all times, because you don't want, I've had prospects come in who had their life destroyed through just making bad tax investments.
Yep.
And back in the time, they used to weird type of donations and things like that. And later on, CRA denied everything.
Yes.
And they not only had to pay, and you think because someone sold you something, it's okay. It's your fault. Like, you're supposed to do your own due diligence on everything. And I think no one accepts that, because they figure, well, I don't understand that, so I can just take whatever someone else says for granted. But you're responsible for everything you do on your tax returns.
Yeah. This is the unfortunate thing. You've got to be careful who you take advice from, even people who you think are qualified.
Yeah.
I do a little bit of cross-border tax work, not with the US, funnily enough, but I'm from New Zealand. So I'm a chartered accountant in New Zealand, a CPA in Canada, and I can file in both countries. And I've crossed that border myself multiple times. So I've developed this little bit of extra side business on helping Canadians move into New Zealand or Kiwis move into Canada, vice versa, with their tax situation. And it's definitely way more complicated on the Canadian side. And I've got this one client just last night, I was emailing with them, and they were saying, because they had a consultation with me and they paid me for my advice, and I walked them through the residency rules. And then they took that document back to their accountant. Their accountant said, no, you're wrong. You can choose where you're tax resident.
Yeah.
And I'm like, that is just total and utter garbage.
Yeah.
You can't choose where you're tax resident. It's a matter of fact. And at the end of the day, I just said to them, listen, you're going to have to choose who you trust.
Yeah.
Because if that accountant gave you an opinion without a reason, I would walk away from as fast as I could. If they walked you through, just like I walked you through, here's how these decisions are made. Here are the factors that go into it. Here's how we've stepped through your scenario and how we came to your decision, your assessment. If they can't do that for you, don't talk to them. Unfortunately, they're getting advice from 2 other accountants that disagree with me. And I just can't fathom how those accountants, all qualified, would be willing to give that advice when they don't even understand the tax treaty, which is the foundational piece of cross-border tax.
I guess the trick is when you're looking to decide with advisors, it's not only about, we're in professions going the similar way, but it's not the person who's going to make you pay the least amount of tax isn't necessarily the way to go with. And I remember it used to frustrate me because I saw bad accountants and they'd save people tons of money in taxes, but it was done wrong, right? And I'd go and put a good accountant in their position, and they told them what they really owe. They said, no, your accountant is terrible. I said, no, my accountant is actually very good. You have a guy, tax preparer, who does this stuff, who's making up things. And when you get caught, you're going to pay for it. But so they judge the refund is the value of their accountant.
I was just talking to a new CPA the other day, and he said, oh yeah, I got this client a great refund. And she was really happy with my service. And I went, that is the worst possible way to evaluate the quality of an accountant.
Yeah.
Is the size of the refund. Because if you're getting a big refund, so all business owners out there, you need to hear this. If you're getting a big refund, you've done something wrong.
Yeah.
Okay. It's not a sign of success or a good accountant. It's a sign of bad planning.
Yeah.
Unless you said, I actually want to get a big refund. I know I've got lots of deductions. I'd rather get a smaller amount every month and then a big lump sum that I can go crazy with in April. If that was your plan, go for it. But if you're relying on your accountant to magically find you a tax refund, you're using the wrong method to value your accountant.
Yeah. It's tough. In our business, I generally don't talk about returns. It's the only thing I have no impact on. Right? When all the stuff we do, we can do financial plan, we can do everything. Only thing I can't tell is what Trump's going to do now.
That's right.
It's going to do what it's going to do. So people always want to say, yeah, well, this guy offered me what rate of return. Well, he doesn't know.
No one can guarantee a return.
None of us know.
I can't guarantee a tax refund.
You're going to get what the markets do, and we'll be well diversified. We'll have your portfolio well positioned and risk tolerance. I don't know what those returns are going to be. They could be negative 20% next year. They could be positive 20%. And it's not going to have anything to do with my performance. I'm going to put you in the best direction, but those things are out of our hand.
Yeah.
And, people tend to judge you on things that you have no impact on. So, but what can you do?
Yeah, that's right. Yeah.
Any other reflections you had for today?
We talked a little bit about AI, and if you're a business owner out there, you're listening to this and you haven't really thought about AI, my advice would be don't leave it too late.
Yeah.
There are some industries where it's going to have a huge impact. accounting, investment, advisory, and planning. It's going to have a huge impact. Other industries may take a little bit longer, but that doesn't mean that you have nothing to think about.
Yeah.
Now maybe AI is going to be a huge asset to you.
Yeah.
Maybe AI is going to change your pricing model. This is what I'm thinking a lot of businesses haven't thought through yet, the pricing pressures. Maybe AI is going to help you get more done with less.
Yeah.
Maybe AI is going to help you launch a new product or service that you hadn't previously thought was possible, opening up more cash flow opportunities so that you can better help your clients.
Yeah.
But if you don't think about that and start working with it, your competitors will work that out.
Yep. So when should someone see you? Like if someone's listening to this podcast, what type of person should call you? Or what should they be going through that they said, I should pick up the phone and give you a call?
Yeah. Well, if you're accountants, we work with entrepreneurs, usually family-owned businesses that are sort of in a growth mindset. We want people who are thinking about growing their business, who want to be profitable.
Yep.
And we want to help them with their cash flow. We would love to implement Profit First with them.
Yep.
At the end of the day, the tax return is something we do because you need a good tax return done. It's not what I get out of bed to do.
Yep.
What I really want to do is work with my clients to help them run a better business.
Excellent.
And a lot of people come to me and they say, yeah, well, my accountant's okay. Yeah, he's great. I've got no complaints, but I'm not getting those things that I heard you talk about. He's not helping with my cash flow. He's not telling me where things are going wrong. He's not telling me how I could improve my business.
Yeah.
And that's what we're all about.
An accountant, and I work with a lot of accountants over, like, just because of my job, I found the good accountants, it's not an April 30th job.
Exactly.
It's throughout the year. And I meet with a lot of my clients' accountants along the way. And I find it's one of the best means I have over a year when I have my client there and their accountant on one call. We can work together to try to accomplish what's best for that client. When you have two silos working, it doesn't help a lot.
Absolutely.
It's good to sit down and say, what do you want to do? Well, let's create some money in the capital. What can you do to get some money in the capital dividend account for us? We're paying out some money. Let's go and do this. And we put all this stuff together and we come a strategy. We say, okay, for the next 2 or 3 years, here's our strategy. We work it together and it ends up being great for the client. I've met some great accountants over time by doing this. And we work very well together. So it's always important to bring your accountant and your financial advisors together in these methods.
And one thing I'd say is, look, your financial advisor is going to help you with your wealth strategy. The number one part of your wealth strategy is your business. Who is advising you on how to grow wealth in the business or with the business, not just invest the wealth that comes out of your business? Yes, tax is an important part of your business results, but they are a byproduct, not the determinator. We never make business decisions solely because of the tax consequences. If they don't stack up economically, no tax policy will change the reality of that decision.
Yeah.
Taxes come second, not first.
I mean, the most important thing is, as you said, profit is first.
Yep.
And
profit first.
And you can always pay no tax and have no profit, but you're not going to get very far in life, right?
Mm-hmm.
So you got to make sure you're looking at that.
Businesses that pay no tax have earned no money and have not grown wealthier.
Yep.
So
absolutely.
Tax is an unfortunate but indicator that you've actually done something right.
Yep. So, Peter, as we wrap up, what stands out for me is that it isn't really a story about AI. It's really a story about timing.
Mm-hmm.
And AI is going to be involved in all of our lives. You can either,
from now on,
you
absolutely.
can either fight it or accept it. And if you're fighting it, you're going to lose the battle. So the sooner you bring it in as part of your life, the better things will be for you. Owners who get ahead of this are seeing their businesses become more valuable. Owners who wait and watching the value erode of their business. Sometimes without realizing it's actually happening.
Yes.
Those listening and thinking about selling in the next 2, 3, 5, and even as we said, 10 years, the one thing they should do, what should they do differently starting this year?
Starting this year. So they should really be thinking about how they extricate themselves from the business, but yet have the business continue to be profitable and grow without them. That's number one. If you can't do that, your valuations will be incredibly limited. And then number two, they have to make sure that the business is generating that positive cash flow. You said earlier, buyers are buying cash flow. Well, if a business can't generate cash flow and have money in the bank to do what it's supposed to do, the whole profit first approach, no buyer is going to want that business. So these things take time to get in place, take time to perfect. And when you do that, you actually might find you enjoy your business a whole lot more than you do today.
It is. Yeah. I remember in our business, I think you talked about this in the podcast. I had a business partner before, and we met with one guy who ran a very advanced financial practice business. And we look at all our profits. We were really proud of our profits. And we looked at the numbers. So what do you pay yourselves? We looked at each other. Well, that's our profits. You go, no. What do you pay yourselves? Right. And it was a new method because he was running a bigger business than us. And he said, well, you need salaries out of there. Like you have to be replaced. Your business is there and you have to find out where you're going to pay yourself. And from that day forward, we put ourselves as one of the expenses of the business because you'll need someone to do that. And to be honest, not only work from an accountant point of view, but our mental vision of the business changed from that moment forward too. As soon as we saw us as an employee of the company, it really changed. There's me as the financial advisor, the employee there. There's me as the business owner. There's two different roles.
Exactly.
And when you look at it that way, your business does a lot better and you make better and more clear decisions too.
Yeah.
So if you're a business owner thinking about the next chapter, whether it's 2 years out or 10, that's exactly the kind of conversation worth having early. You can book a meeting through the link shown in the notes. We're always happy to talk it through. You can also visit tmfg.ca or call us directly at 905-771-5200. And if you got questions on topics you'd like to discuss for future episodes, please feel free to leave it in the comments. So Peter, before we go, where should people go if they want to keep learning from you?
Well, best place to look is our website, accountants.com with an S. And blog, we have articles published every single week about business issues and things of interest to business owners. If you're an accountant listening to this, you want to go to the aiaccountant.ai. And that's where I speak to fellow accountants and bookkeeper business owners about the way AI is impacting their business. And from either of those pages, you can book a meeting with me if you'd like to talk further. And you can always email me, peter@fuelaccountants.com.
Excellent. Thank you very much. And thank you for being the first professional in our expert series of Think Smart with TMFG. So it's fantastic. And thank you very much. That's another episode of Think Smart with TMFG. And have a great day.
You've been listening to Think Smart with TMFG with Mike Connon of the McClellan Financial Group of CI Asante Wealth Management. Don't forget to subscribe to Podbean, Apple Podcasts, Spotify, or YouTube Music, and leave us a review. For more insights and resources, visit tmfg.ca or follow the link in the episode description. This program was prepared by Michael Connon, Senior Financial Advisor with CI Asante Wealth Management Limited. This is not an official program of CI Asante Wealth Management Limited, and the statements and opinions expressed during this podcast are not necessarily those of CI Asante Wealth Management Limited. CI Asante Wealth Management Limited is a member of the Canadian Investor Protection Fund and the Canadian Investment Regulatory Organization. This show is intended for general information only and may not apply to all listeners or investors. Please obtain professional financial advice by contacting us at 905-771-5200 or visit tmfg.ca to discuss your personal circumstances before acting on any information presented.